Hi dear students, my name is Professor Vikram Palacha. I welcome you all in my YouTube channel. Today, our topic of discussion is it is related to the taxation and it is about the total taxable income of an individual as well as tax liability. So, in this discussion today, we are going to discuss how to compute the total taxable income of an individual as well as how to compute the tax liability of an individual. So let's begin to our discussion. So first of all now, we have to discuss how to calculate the total taxable income of an individual. So it is very simple to calculate the total taxable income of an individual. First of all, what we have to do? We have to calculate the combined income of an individual from the five sources of income. That is income from salary. Under that we have to add income under the head of house property. Then next we have to add profits and gains of business and profession. And then we have to add capital gain income. And finally we have to add income from other sources. So these five heads we have to add, then we can get the gross total income. Then from this gross total income, we have to list the deductions applicable under the section 80C to 80U. After deducting these deductions, we get the total taxable income of an individual. So in this format, we have to find out the total taxable income of an individual. Okay. In this, the most important part, that is the deduction under section 80C to 80U. Those are applicable, those are deducted. Now one by one, we have to discuss which deductions are available in each section. So first of all, there is a section 80C. So these deductions are there. Investing into very common and popular investment options like LIC, Public Provident Fund, Sukanya Samruddhi account, mutual fund, fixed deposits, then tuition fees of the children, as well as principal amount of an housing loan and life insurance. These are the ones, these are the investment under the common sections, common things. Okay, who can invest? Individual or Hindu undivided family, they can invest. And how much amount is available as deduction? So up to rupees 1,50,000 is available as deduction. If amount is more than 1,50,000, at that time only 1,50,000 is deductible. If it is less than 1,50,000, then full amount is deductible. So it is what? It is the section 80C. The next section, that is section 80CCC. So investment in pension funds, those are deductible here. Okay, and individual can invest this. Then section 80CCD 1, Atal Pension Yojana and National Pension Scheme contribution amount is deductible here. Okay, and it is also invested by the individual. Whatever amount is there, that whole amount is available as deduction. Okay. Then section 80CCD1B, Atal Pension Yojana and National Pension Scheme contribution. It is up to rupees 50,000 is deductible under here. Okay. The next one is section 80CCD2, National Pension Scheme contribution by employer. Individual can invest this. Amount contributed for 14% of basic salary plus dearness allowance in case the employer is central government employee, and if the employer in any other case, the reduction is 10% of basic salary plus dearness allowance. Okay, actual contributed amount or the amount calculated with this formula, whichever is lower, that amount will be available as deduction under section 80CC D2. The next section is section 80D. It belongs to medical insurance premium and medical expenditure. Individual or HUF, they can invest under this. Okay. So medical insurance premium up to rupees 20,000, 25,000 is deductible in case of normal individual, and up to rupees 50,000 is deductible if the individual is senior citizen, means more than 60 years old. age. Okay, that is related to the section 80B. In normal case, means if the age of the individual is less than 60 years, at that time it is up to 25,000, and if more than 60 years, at that time is 50,000. Okay. Then section 80BB, medical treatment of a dependent with disability. Okay, individual and HUA both are applicable here. If the disability is less than 80%, means that is a normal disability. At that time, the limit is 75. And if the disability is more than 80%, that is a severe disability. At that time, this deductible up to rupees 1,25,000. Understood? So it is regarding the medical treatment of a dependent with disability. Then next one is section 80DDB. It is for the specified diseases. It is applicable in case of individual as well as HUA. In case of senior citizen, up to rupees 1 lakh is deductible, and in case of others, means less than 60 years of age, is deductible up to rupees 40,000. Understood? The next one is section 80E. Interest paid on loan taken for higher education. Interest paid on loan taken for higher education, applicable for individual. 100% of the interest paid up to the 8th assessment year from the date of loan taken. Okay, that is the limitation. 100% amount is deductible, and it is deductible up to next 8 assessment. Understood this? The next one is section 80EE. Interest paid on housing loan. It is implemented in the assessment year 2018-19, and it is applicable in case of the individual up to rupees 50,000 subject to the concerned conditions. Okay, that is the limit. The next one is section 80EEA. Interest paid on housing loan. Okay, it is also applicable for the individual, and it is up to rupees 1,50,000 subject to some conditions. The next one is section 80EEB. Interest paid on electric vehicle loan. It is implemented from the assessment year 2020-21. It is applicable in case of individual. And how much is the deductible amount? Amount up to rupees 1,50,000 subject to some conditions. Next one is section 80Z. Donation to charitable institution. All assessees. This is applicable in case of all assessees. If it is individual, undivided family, or company. 100% or 50% of the donated amount or the qualifying limit specified, that amount will be deducted. For some funds, it is 100% allowed. For some funds, it is 50%. Under this section, allowed donation in cash is up to rupees 2,000 only. If more than 2,000 is donated in the form of cash, at that time it can't be claimed under section 80G. Okay. The next section, it is section 80GG. Income tax deduction for house rent paid. Okay. For some kind of individual, house rent allowance is not given to such individual. This section is applicable. Okay, and it is applicable in case of the individual. How much amount? Rupees 60,000 or 25% of total income rent paid minus 10% of total income. Okay, whichever is lower. From these two, whichever is lower, that amount will be deductible. Then section 80GGA. Donation to scientific research and rural development. This section is for donation to scientific research and rural development. All assessees except those who have an income or loss from business and or profession. Okay? And the limitation is 100% of the amount donated. Allowed a donation in cash up to rupees 10,000. If donation is other than cash, then 100% amount is deductible. If donation is given in the form of cash up to rupees 10,000, then it is applicable under this section. If it is more than 10,000, not applicable under this section. The next one is section 80GGB. Contribution to political parties is applicable in case of companies. 100% of the amount contributed, that is available as deduction. No deduction available for contribution made in cash. If this paid other than cash, then 100% amount is deductible under this section. But if it is paid in cash, then nothing will be applicable as the deduction. Okay. The next one is section 80 GGC. Individuals on contribution to political parties. It is applicable for individual, HUF, AOP, BOI firm. 100% of the amount contributed. No deduction available for contribution made in cash. If it is contributed other than cash, then 100% is deductible. If it is in cash, at that time, nothing will be applicable. Okay, so it is regarding section 80 GGC. Then next section, it is section 80 RRB, royalties on patents. It is applicable in case of individuals. Okay, and the limitation is rupees 3 lakhs or specified income, whichever is lower, that will be deductible. The next section, that is section 80 QQB, royalty income of authors. It is also applicable in case of the individual, and the limitation is rupees 3 lakhs or specified income, whichever is lower. Okay. The next section, it is section 80 TTA, interest earned on savings account. It is applicable for individual as well as HUF, and it is deductible up to rupees 10,000. So whatever interest is on the getting by the individual or HUF on their saving account, up to rupees 10,000 deduction is available under section 80 TTA. The next one is section 80 TTB, interest income earned on deposit like saving as well as FDs. It is applicable in case of individual more than 60 years of age, and the limitation is up to 50,000. So this section is applicable only for the senior citizen, or the interest income earned on deposit like saving and fixed deposit, and it is up to rupees 50,000. Okay, and the next section is section 80U. It is applicable for the disabled individual, means handicapped person, and the applicability only for the individual. Suppose the disability is less than 80%, means normal disability, and that time rupees 75,000 is available as lump sum reduction, and if the disability is more than 80%, means it is a severe disability, then it is rupees 1,25,000 lump sum reduction is available. So these are the deductions under section 80C to 80. Understood? These deductions can be claimed from the gross total income. Once we got the total taxable income, then we have to calculate the tax on that, and then the tax is calculated according to the income tax slab of the year 2020-21. So first of all, there is a slab that is for the individual, resident or non-resident, who is of the age of less than 60 years on the last day of the renewal previous year. This is the slab for the people, those are less than 60 years of age. In this slab, we have to break up the income, and then we have to calculate the tax on that. So what is the slab? Up to rupees 2,50,000, nothing will be taxable, it is nil. Then from rupees 2,50,000 to rupees 5 lakhs, 5% is the rate of tax. Then rupees 5 lakhs to rupees 10 lakhs, 20% is the rate of tax, and above rupees 10 lakhs, 30% is the rate of tax. So it is the slab for the people, individual, those are less than 60 years, up to rupees 2,50,000 mean, rupees 2,50,000 to rupees 5 lakhs, 5%, rupees 5 lakhs to rupees 10 lakhs, 20%, and above rupees 10 lakhs is 30%. Understood? The next, for the resident senior citizen, that is every individual being a resident of India who is of the age of 60 years or more, but less than 80 years at any time during the previous year. So this is the slab applicable for the senior citizen whose age is more than 60 years but less than 80 years. So for them, the slab is up to rupees 3 lakhs, mean rupees 3 lakhs to rupees 5 lakhs, 5%, rupees 5 lakhs to rupees 10 lakhs, 20%, and above rupees 10 lakhs, it is 30%. So it is a slab for the individual, those are more than 60 years of age but less than 80 years of age is the senior citizen. Understood the slab? Now the last and third slab is for the super senior citizen, means it is for the more than 80 years of age. And the slab is up to rupees 5 lakhs mean rupees 5 lakhs to rupees 10 lakhs 20%, and above this 10 lakhs it is 30%. Okay, so this is the slab applicable for the individual those are more than 80 years of age. This is 5 lakhs mean rupees 5 lakhs to rupees 10 lakhs 20%, and above rupees 10 lakhs is 20%. So with these slabs we have to find out the tax. Okay, and then under that surcharge is added when, suppose, if the total taxable income of individual that exceeds rupees 50 lakhs, at that time 10% of income tax is the surcharge added, and if such income exceeds rupees 1 crore, at that time 15% is added as surcharge. Okay, then from that rebate is deducted. That rebate is available under section 87A. Okay, before the rebate, health and education says we have to add 4% of income tax and surcharge if applicable. Once it is found out, then we have to deduct the rebate under section 87A if the total taxable income of assessee does not exceed rupees 5 lakhs, means it is less than 5 lakhs. At that time, rupees under section 87A, the rebate of rupees 12,500 is deducted. Understood this? So in this way, we have to compute the tax liability of an individual. Okay. So understood, students. So today in this discussion, we have discussed how to compute the total taxable income as well as how to compute the tax liability of an individual. I hope you have liked my videos. For the videos like this, please subscribe my YouTube channel. Also, press on the icon button. I will upload the videos like this, which will be definitely useful for you. Right now, guys, thank you to